I'm wondering, Dan, before we get to some of the big names, if you've been thrown in general by what some argue is a breakdown of software and worries about IT spending, not just next year, but the next few years.
Yeah, I think you're starting to see some cracks in the armor in terms of IT spending, high multiple software names, very crowded from an institutional perspective. You're seeing many head for the exits. I think to some extent it's maybe overdone here in terms of what we're seeing, but it just shows the risk off into earnings season really continues to be front and center.
Steve, really quick on that.
Yeah, no, I would agree. Software in particular has really been taking ahead of the last 3 months, and you've got companies that are doing fine, but when you're selling at a median PE of 38 times, 8 times sales, it doesn't take much to send those stocks down. So we would probably let that play out for a few more months before coming back.
Dan, it's Cloud Week. How much does that matter versus Intel, maybe getting some insight into the IT spending question?
Yeah, I think it's massive because when you look at Microsoft as well as Amazon from the AWS perspective, that's really the key driver here. That's the fuel in the engine for IT spending. And that's why really a big focus this week in terms of some of the worries you've seen from Workday and others. I continue to think you're going to see strength on Microsoft. I think you can see a 3 to 5% beat in terms of cloud. I also think on AWS you see strength. I think this could be something, a feather in the cap for the bulls overall, take software and cloud names higher.
Steve, I want to get your thoughts as we start to get these so-called FANG earnings underway with Amazon later this week. What your thoughts are on these big cap tech names, given the fact that in the last couple of years, their outperformance has really been the thing that's powered markets. And this year, we're not seeing that level of outperformance. They're trading largely in line year to date.
Yeah, FANG is really underperforming the rest of tech. And in an investor survey that we did recently, the expectations are worse for FANG than for the rest of tech, particularly concerns about a name like Facebook. The valuations are actually quite reasonable. If you look at Facebook, 20 times next year's earnings isn't too bad. But what they're going through, as we saw last week with Zuckerberg's speech, is a governance of platform problem. How responsible are they for what happens on their platform? They were taking a lot of actions. Now they're kind of backing off and saying, hey, look, we've done as much as what we can do. We need free expression. That's probably going to put a cloud over the stock for a while.
Dan, I want to go back to what you were saying about cloud being a catalyst, I guess, or maybe even a bellwether for IT overall. How long has that been the case, and how easy is it to read through when you're looking at the numbers for Azure and you're looking at the numbers for AWS, what the downstream impact are going to be for semi manufacturers, for server providers, and so forth?
Yeah, and combined with Intel as well. I mean, I think to put some numbers around, only 30% of workloads are in the cloud today, going to 55% next 3 years. So when you look what's happening overall IT spend, you're seeing cloud spend 6, 7 times that number. And I think there's a definite read-through for further downstream on the application players as well as just the infrastructure. But that's why Intel is the other missing piece, because I think if you look at chips and software here, in our opinion, that's the one where I think you see those stocks move higher, 10, 15% coming through earnings. I view it as a positive catalyst with AWS and Microsoft as the read-throughs going forward.